Well, for more on today's retail earnings, we are now joined by Ed Yruma, an analyst at Keybanc Capital Markets. Ed covers Nordstrom, which reports in just over an hour. He is ranked #1 by Bloomberg among analysts covering Urban Outfitters. Ed, welcome to Bloomberg. Always good to have you on.
Hi, how are you?
Very well, thank you. Talk to us about Urban Outfitters. Decent quarter, executing well, right?
Yeah, absolutely. The company is clearly seeing the benefits of share gain. The merchandise is fresh, and we think the product offering is very compelling.
Oh, I'm sorry.
Well, I was going to say, Ed, what's going on with the shares today, though? Yeah. I mean, we're seeing a 6% decline here, even though if you look at the numbers on the face of it, they seem to beat.
Well, we think there's just still a lot of concern around the consumer, and the company still remains somewhat guarded. They were very clear in saying that they don't think the consumer is back to the levels it was in '07, and we think investors are just looking at the run in retail shares over the past couple months and taking some profits.
How has online affected that?
I'm sorry?
How has online affected that?
Online has continued to take market share, and we think it's become a bigger and bigger part of the business. For Urban Outfitters, it was almost 18% of their sales during the quarter. Over time, we think this could hurt the actual physical stores as sales move online. For Urban, this is a positive, but it's something to be watched.
I'm also curious, Ed, I mean, Urban has a small presence, but a growing presence in the UK and also over in Europe. Is that going to be something that helps it or hurts it, given the current economic environment over there?
Well, clearly the economic environment, particularly in the London area, is very pressured, but we've been at the Urban stores in Europe recently, and we think sales continue to trend very well. It's quite a big expansion opportunity for them, and we think particularly Anthropologie resonates with the European consumer.
You know, I was going to ask you about Anthropologie and sort of the disconnect between that and the flagship Urban brand, which isn't seeing a same-store sales growth at the same pace that Anthropologie and Free People and some of the other brands are having. Is that an area of concern for you?
Not necessarily. Part of it is that Urban Outfitters actually had a relatively strong start last year, so it's an issue of comparisons. And if you look at it on a two-year basis, performance is actually relatively comparable across both brands.
Ed, talk to us about Nordstrom and in particular how it seems that this is affecting the luxury retail sector. Are we getting a sense that people are now willing to go back into the high-end stores and spend money?
Absolutely. The high-end consumer was, in our opinion, the most affected by the downturn, and conversely, it's kind of the first one to come back.
Why do you suppose that is?
Honestly, I think it's a psychology issue. The high-end consumer didn't necessarily lose their ability to spend. They just looked at their 401k, they looked at their job prospects and stopped spending. And we think that they're getting some of that confidence back now.
What are you expecting from Nordstrom in terms of margins? I mean, obviously not in the same sort of market, but Urban reported that margins improved. Are we not seeing the retailers do as much promotions, as much cutting?
We've definitely seen promotions come down quite a bit, and for Nordstrom's after the close, we expect that gross margins will be up as well due to lower promotions and quite frankly, low inventory levels.
And Ed, you're a buy on Nordstrom, correct?
That's right.
Why?
Well, we think Nordstrom is one of the best-run department stores, and we also think that they're going to continue to gain market share within the department store channel. They actually discounted less than the department stores, and we think that helps the high-end consumer come back.
Just quickly here, Ed, I'm curious about Nordstrom's credit card business. I mean, like a lot of department stores, they have their own store brand credit card. And I imagine with that, they've been running into some of the same problems that the banks, for example, are running into with charge-offs and whatnot.
Absolutely. A couple key points there. First, charge-offs continue to run at an elevated rate, and I think it's something that will be an issue on the conference call today to get more color on the credit environment. However, early-stage delinquencies have fallen, which we view as a positive longer-term sign.
All right, Ed Yruma, thank you so much for joining us. We appreciate it. We'll be looking for those Nordstrom numbers after the bell today.